Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So we have kittens, and one of them in particular loves to go out on our pool deck and hunt. And he's actually caught a few lizards, so he has some hunting prowess. But his success suffers from, let's just say, a lack of focus. He'll see a lizard and he'll start stalking it, and then a bird will grab his attention. As he tracks the bird, a squirrel will start chattering, and that'll sidetrack him yet again. Oh, look, there's a lizard. On and on it goes. And sometimes I have to be honest, I feel like my kitten when I'm watching news headlines. Especially if I'm on like a platform like X where it's just this scrolling stream, right? The news is always fast and furious, and it seems faster and furiouser since the war with Iran has started. As prices whipsaw, it's hard not to get caught up in emotion. And that's why dead people generally make better investors. I know that sounds kind of funny, but actually it's true, at least to some degree. And I'm going to explain here in a moment. But before I do, I want to take a moment and thank you for listening to the show. As always, I do very much appreciate the fact that you spend a little bit of time with me every week. There's so much out there vying for your attention, the faster and furiouser news feed. And so I appreciate that you find value in spending a little bit of time listening to this. If you would be so kind, I would appreciate it if you would spread the love. Go to wherever you're listening to this podcast and write us a quick review, or at least give us some stars. The more stars, the better. And also, if you would share these episodes on your own social media feeds, it will help grow the show, and I would really, really appreciate it. But mostly, I just want to thank you for tuning in and say that I do appreciate you. You're the reason we do this show, so thank you. So, when I was a kid, I remember my dad trying to teach me not to act rashly. I was like most teenage boys. I had a tendency to allow my emotions to drive my actions. And to illustrate his point, he used to say, "Don't just do something, stand there." And of course, when he said this, he was flipping the script on the saying, "Don't just stand there, do something," right? His point being that sometimes you need to pause. You need to not act. You need to think and, cipher on what's going on before you take action. And turns out this is pretty good investment strategy as well. And researchers by several companies, including Dalbar, Fidelity, and Vanguard, reveals that dead people tend to be better investors than living people. Now, not suggesting suicide here, but you can adopt the strategy that a dead person would employ, doing nothing, because that's obviously all a dead person can do, right? So, based on the aforementioned research, the best investors aren't necessarily the smartest people. They're not the people who have degrees in finance. They're not even the most experienced. They're dead. Or perhaps they're still walking among the living, but they forgot they had an investment account, They've got an IRA somewhere and they just haven't paid any attention to it. So it's just kind of on autopilot. Well, how does this make sense? Well, one of the key points here is that dead people don't get caught up in their feels. And I mean, of course, human beings are emotional beings. We're emotional creatures. And emotions often drive our decision making. Go have a conversation with somebody on social media, and you'll see how quickly emotions can dictate and direct the conversation. Personally, I'm not prone to panic or rejoice over daily price movements. I tend to be pretty level-headed, but still, I'll confess, we had the big gold and silver sell-off at the end of January. I was a little uncomfortable watching the negative numbers get bigger and bigger, right? I'm not going to lie. Selling crossed my mind, especially silver. So I understand, I'm not criticizing anybody here. It's just the way human beings are wired. Brad Klontz is a certified financial planner and financial psychologist, which is kind of a cool thing. It's like, how do you become a financial psychologist? I get being a psychologist, but how did he find that particular specialty? Pretty cool. I think he'd probably be an interesting person to talk to. But anyway, he says that human behavior is the biggest threat to our portfolios. Quote, it's them selling investments when they're in a panic state and conversely buying when they're all excited. We are our own worst enemy, and it's why dead investors outperform the living. And Klontz goes on and he says that humans are evolutionarily wired to run with the herd. And I've read this too. I mean, I'm no anthropologist, but it is very true. We are herd animals. We have those instincts. And Klontz says our approach to investing is actually psychologically the absolute wrong way to invest, but we are wired to do it that way. And that's this emotional, kind of gut, throw it all in or pull it all out. Ritholtz Wealth Management CIO Barry Ritholtz agreed, saying that big market moves can trigger a fight or flight response in our brains. And, we all have this. I'm a fight response, definitely. You can kind of tell if somebody comes up behind you and startles you. If your initial reaction is to kind of run, duck, cover yourself, you tend more towards flight. And if you want to turn around and punch them in the face, that is more of a fight response. Definitely a fight response. But Ritholtz goes on and he says, we evolved to survive and adapt on the savannah, and our intuition wants us to make an immediate emotional response. That immediate response never has a good outcome in the financial markets. Now, if a lion is closing in on you, definitely makes sense to base your response on that emotion because you're not going to have time to think it through. But financial markets are a different matter altogether. Now, I'm not saying that you should just ignore your portfolio completely, right? That would be foolish. So just throwing that out there. You do need to make adjustments to your portfolio from time to time. And there are definitely times to buy and times to sell. So you do have to be willing to take action. What I'm talking about here is avoiding those snap impulse decisions. And, if you watch the markets at all, you know that every bit of news seems to drive some kind of market movement up or down. But almost all of them are short-lived, right? So you don't want to react to every new post that pops up on X, trying to time the markets based on what has become a 30-second news cycle is going to wreck your savings and your sanity along with it. And again, you don't want to ignore your portfolio completely. You don't need to ignore headlines completely. Sometimes they are important. Sometimes they will signal changes in the direction of the markets. But you'd always try to put headlines in a broader context. And this is why I'm constantly emphasizing the macro environment, like what's going on in the bigger picture. It is important to know what the CPI data for February, comes out being, or what the job numbers are. But you've got to put those into a broader context. If you're not looking at the bigger picture, those numbers can be deceiving and actually lead you in the wrong direction. So when you see a big price swing, ask yourself, did anything just happen signaling a change in the fundamentals? And if the answer is yes, well, you probably need to explore that more carefully and it may be time to make a move. But if the answer is no, you probably want to stand pat even if the rest of the market is selling off, right? So you don't have to be dead to be a good investor. You don't even need to be dead inside, but you do need to keep your emotions in check. Stay focused on the fundamentals and don't react to every single news headline or price move. And I feel that this is particularly important as this Iran war plays out because there are so many headlines to parse through, and a lot of it, let's be honest, it's just propaganda. And I'm talking about from both sides. Yes, the United States also throws war propaganda out there. So you have to be wary. And again, probably not a good idea to make snap reactions. The other day, oil sold off steeply just because Donald Trump got up and implied that the war was almost over, except it isn't. Probably. I mean, who knows, right? But there are constantly things that are going on. The other day, oil was selling, and everybody's like, "Oh, maybe the war might be over." And today, I'm reading that it looks like Iran is dropping mines in the Straits of Hormuz, which could be a long-term significant impediment to the flow of oil. So we don't know how that's going to play out. We have to watch it. But just because Trump says something doesn't mean it's time to adjust your portfolio. And it's hard, I grant you. In this environment, with this particular political leadership that is prone to, make wild swings in what it's doing from day to day, it's hard. But you kind of have to just sit back and try to take it all in and decipher it as best you can. So as I discussed last week, war itself doesn't tend to have much of a long-term impact on the trajectory of gold. Of course, that doesn't mean it has no impact. And I came across some interesting analysis from Metals Focus indicating that this war may actually have some longer-lasting ramifications. I like Metals Focus. I like their work. They are an association, and basically they just support the market. So they do a lot of data analysis, and I think they tend to be pretty objective. I think sometimes their assumptions can be a little bit mainstreamy, but that's okay. But I do like Metals Focus. I kind of want to go through some of the things that they said in this report. Metals Focus notes that there tends to be an initial boost to the gold prices at the onset of a war. Quote, looking back in history, the boost that gold tends to enjoy because of geopolitical tensions or shocks rarely lasts. Indeed, this is largely the case for most markets, leaving aside, of course, assets' favorable supply and demand fundamentals. Even in cases when conflicts have been prolonged, investor fatigue has soon set in and appetite for safe haven assets has dissipated. So I think that's interesting. I mean, of course, war is going to have profound impact on assets, right? Defense contractors, oil, things like that. But it's not necessarily going to have long-lasting implications for the broader market. And the safe haven phase was particularly short after the U.S. and Israel launched their attack on Iran. If you remember, right after the attack, gold surged and it eclipsed $5,400 an ounce very, very briefly. But that safe haven spike quickly corrected along with everything else a couple of weeks, or I guess a week ago, leaving significant price volatility in its wake as everybody tries to sort through the propaganda and figure out exactly how the war might play out. So we saw that initial boost and then it actually corrected back. So right now we're kind of hovering in that $5,000 to $5,200 an ounce range that we've seen since the big sell-off and correction back in January. Today, we're kind of on the high side of that. I think it was 5,200, just over that when I started recording the podcast. But a lot of volatility, a lot of big swings up and down. Not unusual to see $50, $60, $100 swings in the gold price right now, just because there's so much uncertainty that people are trying to work their way through. So in the near term, metals-focused analysts expect frequent price rallies driven by war headlines. I think sell-offs as well. However, they don't expect the price to scale all-time highs due to the war itself. Quote, as the market consensus oscillates between this and the sort of complacency we have seen develop this week toward the war, corrections are also in the cards, resulting in a period of heightened volatility. So basically what I've been saying, a lot of volatility, a lot of up and down. The metals-focused analysts say gold could get a bigger boost if the situation spirals out of control. That's common sense. Or, quote, if one or more of the fat tail risks instead crystallize. I think they're talking about things like, the Strait of Hormuz being closed down for a long period of time, or, a significant military setback for the U.S. or something like that. Quote, either way, sooner or later, the impact of the war on the gold price will wane. Whether this is due to de-escalation, war's over, or investor fatigue that tends to develop, some of the conflict-related safe haven bid for gold will dissipate. And we've seen that historically, and I talked about that last week. That tends to be the way the gold price goes. So while wars don't typically have a longer-term impact on the gold market, Metals Focus argues that this time it could be different, identifying, quote, a sizable tail risk due to the specifics of the conflict. Analysts specifically note the location of the war and the potential for Iran to significantly restrict global flow of oil, plunging the entire world into economic chaos. So that's what I'm alluding to when I keep mentioning, the Iranians' ability to hinder or even shut off the supply of oil moving through the strait. But even without the worst case scenario, Metals Focus analysts say that they have, quote, no doubt that the war is going to contribute to, quote, the wider positive sentiment toward gold and its investment case. And I can definitely see what they're driving at here. And they base this conclusion on three key factors, and I'll cover those here in just a second. But I do want to reiterate the fact that the gold price is going to continue to move as the war progresses, of course. And the war is going to have an impact. It's another factor that we have to look at as we consider the direction of the markets. But we should also be very aware, and this is kind of what we're driving at here, we have to be aware of the fact that there are other factors still in play that probably have a bigger impact on the gold price, right? A lot of the things that have been in play all along will continue to be in play. So war is an additional thing. It's not like we forget about everything else that's happened and focus only on the war. And it's interesting because if you go back and look at the history, and I talked about this in a previous show, you will see that as a war goes on, other factors start to influence the direction of the gold price, particularly monetary policy. Now, the trajectory of the war can definitely impact the trajectory of monetary policy, so it does fit together, but you have to look at the big picture. So what are these three key factors that Metal Focus kind of hones in on? Well, the first one is that there are broader U.S. foreign policy implications, right? And we've seen this. It's not just the Iran invasion. U.S. foreign policy has grown increasingly interventionist under the Trump administration. And this raises geopolitical uncertainty, just in general, right? And think about what's happened over the last, couple of months here. The U.S. government has effectively overthrown two regimes in the last 2 months. As Metal Focus notes, whether you agree with this aggressive foreign policy or not, quote, it comes with lasting implications regarding the country's foreign policy. Quote, it signals an appetite to induce regime or political change using hard power, if necessary, to meet its strategic objectives. And analysts also point out that the U.S. did not do much to coordinate the attack with its traditional European allies. I was thinking about this the other day before I even read this. I was thinking back to the first Gulf War back in 1990. So they actually started ramping that up in 89. And we had Operation Desert Shield. And I remember a big part of that was getting all of our coalition partners to be down with the operation, right? A lot of emphasis on that. We got to get our coalition partners. There ain't no coalition partners in this war other than Israel, right? There really was no coordination with Europe at all. So this is different. This is a change. Metals-focused analysts said, quote, on balance, such shifts in the world's largest economy and leading military power amplify geopolitical uncertainty. So what they're saying here, basically the first point is that this war will tend to exacerbate some of the geopolitical uncertainty and some of the distrust we've seen from other nations toward the United States. And that has been one of the things that has driven gold. The second thing that they pinpoint is the potential for long-term instability in the Middle East itself, right? Regime change does not guarantee a better regime. In fact, Mojtaba Khamenei, I'm probably butchered that, but he has taken over the mantle of leadership in Iran, and he is the the son of the former supreme leader. So we traded in one Ayatollah for another. And he's been described by some as his father on steroids. So we actually might have made the situation worse in terms of the regime. Now, it's not to say that he'll make it to the end of the war, right? We might regime change, but that's where we are. There's no guarantee that we're going to get to the end of this and things are going to be better in the Middle East. And let's be honest, if we look at history, if we look at Afghanistan, Iraq, Syria, Libya, Somalia, none of those places ended up being more stable after U.S. action. It's just not how it works. There's too many unforeseen consequences. I told a friend of mine the other day, and I've been thinking about this a lot. This kind of foreign policy, central planning fails for exactly the same reason as economic central planning fails. We just can't know enough. People don't have enough knowledge, and they can't anticipate all of the ramifications of a given action. So central planning always fails, and it fails when you're trying to plan central policy as well. You have all of these other personalities and contingencies and things that can happen. So I think this is a really good point. Might not be better when it's all said and done. As metals-focused analysts point out, the new Iranian administration could become, quote, yet more radicalized and adversarial. Quote, the possibility of internal turmoil that spills over into neighboring countries can also not be ruled out as the various factions in what is an ethnically diverse country compete for power following a potential regime collapse. And of course, the United States is encouraging this. I saw that they were trying to arm Kurdish fighters in Iran. So that's kind of one of those ethnic groups that would be vying for power. So again, no guarantee that things are going to end up better. And of course, this kind of geopolitical chaos is always bullish for gold. The final thing that the metals-focused analysts pointed out was the fact that treasuries have failed as a safe haven, and they see this as kind of a dynamic shift that could move forward even after the war is over. Treasuries have historically served as one of the go-to safe havens in times of uncertainty. That's not true anymore. The yield on the 10-year treasury has nudged up since the Iran war commenced, so that indicates sagging demand for treasuries. And this is a trend that is ongoing. It was happening before the war, and there have been several other situations where we've had the safe haven demand and the risk off sentiment hit the markets, and treasuries really didn't respond. People don't want U.S. government debt right now. There's too much of it. There's very little faith that the United States is going to get its fiscal house in order. This is a fundamental shift because with treasuries failing as a safe haven, that leaves gold as the last safe haven standing. And so that's why the Metal Focus folks are looking at this and saying, this could be something that extends on after the war. So those are the three things that the metals focus folks point out. On top of those things, I would add that the war will likely supercharge some of the factors that were already driving the gold and silver market higher. So, usually wars are just kind of a blip on the radar. They impact the price initially, and then things kind of settle out. The reason that I think that this could actually have a bigger boost on the gold market as we move into the future is because it is going to exacerbate situations that were already in place and driving the gold bull market. I think this has the potential to kind of give the gold bull some steroids and silver as well. For instance, I've been talking a lot about the debt black hole. Right? We have massive levels of debt in this economy. We've talked about the national debt and how it continues to grow and how spending is going up every single day. We have a significant level of household debt. I wrote an article this week that you'll find over on moneymetals.com/news highlighting how much household debt has expanded in the fourth quarter of last year, and it's at record levels. And On top of that, a lot of folks are starting to struggle to make payments. We're seeing an increase in delinquencies. And then there's corporate debt. I wrote another article that highlighted the fact that there are a lot of analysts that are starting to worry that this combination of corporate debt and instability in the corporate debt market, coupled with the potential for an AI bubble burst, could be a big problem for the stock market. Now, war is just going to make the debt black hole that much bigger, right? I mean, how much money is the federal government running through every day to fight Iran? I actually looked it up, and the Pentagon hasn't released any figures, so these are estimates, but the cost seems to be around $1 billion a day, right? $1 billion a day. War is always costly. And then, of course, rebuilding countries after a war is also costly. And who's going to pay for all of this? Well, we are, right? And to be accurate, we're going to pay for it after the government borrows it. This is going to have to boost borrowing because the U.S. government doesn't have this money. And more borrowing will ultimately lead to more money printing, right? They have to inflate the currency to support the borrowing and spending. So that means they're going to be stealing more of your purchasing power. So the war is just going to feed the debt black hole, right? And it's also likely to make some countries even more wary of the U.S. and its foreign policy. The Metals Focus analyst alludes to this. This could accelerate de-dollarization, which has been a big driver in the gold market. People are becoming more and more wary of holding dollars because they recognize the potential of that being used against them by the U.S. government should the U.S. government want to try to pressure them into something. And, you know, I hear a lot of people, I talk about this and they go, I don't care what those other people think. And I get that. But you know what? You got to care what other people think when you're depending on those other people for your economy. And I think we're all linked together. I think it'd be a lot better if we could all be linked together, trading peacefully as opposed to like shooting each other. But that's an aside. But you see my point here, right? War news is relevant, but you've got to keep your eyes on the other balls that are also up in the air. Don't get swept up in the emotion of price swings because Trump said something or CNN reports something, right? The war itself is probably not going to have a long-lasting impact on the markets, but other things will. Things that come out of the war, things in place before the war, and some will be exacerbated by the war. And not many of these things are bearish for gold, at least not in my view. I really can't find a lot of scenarios that make me think, well, this war is going to be over and then the gold market is going to go into a bear market. I just don't see that. I don't see any of those factors lining up. In fact, the price dips might be a buying opportunity. And, you know, you want to have gold, you want to have silver. We have some specials that you can check out. If you go to moneymetals.com, on the very top of the page, you'll see our specials, and you can click on that and see what's on sale. But I wanted to highlight something because it's actually one of my favorite gold bullion products, and that is the gold Krugerrand. South African minted coins. And the reason that they're my favorite is because they were my grandfather's favorite, and he invested in those way back in the 80s. Man, that looks like a smart investment going back, right? I think he paid like maybe $200-300 for those Krugerrands. And my grandmother actually wore one. It was a half-ounce Krugerrand, and she had it put in a like a little frame, I guess, that she could wear around her neck. It was really beautiful. Now, you think about that today, I'm not sure that I would want to wear a half ounce of gold coin around my neck. I'd see that thing getting ripped off. But anyway, so we do have Krugerrands on sale at Money Metals, very low spot prices. So you can check that out over at moneymetals.com. But gold bullion coins are a great way to have physical gold. You know, they're going to retain their value. Everybody recognizes the value of a Krugerrand or a Canadian maple leaf or a U.S. gold eagle. You can go anywhere in the world and people will recognize those as valuable. So check that out over at moneymetals.com. Before I close out the show, I do want to note that the war is having some impact on the gold market itself. I'm not talking about the price, but I'm talking about the logistics, even as I speak. With airspace closed and a lot of flights grounded, gold is stuck in Dubai. and they're actually selling gold at a discount within the borders of that country. So the United Arab Emirates ranks among the world's top gold refiners and bullion exporters, primarily serves the Asian market, and it's also a conduit for gold shipments from Switzerland and the United Kingdom, along with several African countries. In 2024, around 1,392 tons of gold flowed through the UAE. So if you look at kind of think of it this way, the UAE is basically a middleman in the global gold trade, a very important middleman. Mining companies will typically refine ore into what they call doré bars once it's pulled out of the ground. So these bars contain anywhere from 60 to 90% gold, but it's mingled with other metals. It's not completely refined. Once the doré bars are formed, and they do this because it's easier to ship, right? So they'll send these doré bars over to the refineries in the UAE where they're formed into bullion bars and jewelry grade gold that is then exported back to the Asian markets. The UAE grew into a significant refining hub due to its strategic location. So, I mean, think about where it is, right? It's kind of sitting right there between Asia, Africa, and Europe. It's a crossroads. And they also have a lot of economic policies that kind of incentivized its growth into an important gold hub. It has a large free trade zone, so that means there's lower import and export barriers. And then the country has a massive bullion and jewelry sector of its own, a lot of gold demand right in the UAE. And they're getting a discount right now because people are trying to unload this gold. The ongoing war is basically hampering transporters, stranding tons of gold in that Middle Eastern country. So rather than holding on to it and paying a bunch of storage fees and other costs that are associated with holding the gold, they're just trying to sell it. And reports are that some dealers are opting to discount gold close to $30 an ounce. So if you can get over to the UAE, you might get a bargain on gold, although I wouldn't recommend that at this point. Gold is often shipped on commercial airline flights. Didn't know this, but if you go on an international flight, there's the possibility that there's a pallet of gold right underneath your feet. With the war raging, though, officials have closed significant portions of the UAE's airspace and, of course, other areas throughout the Middle East, and many flights have been just outright canceled. Even when the planes are flying, a lot of dealers are reluctant to pay the skyrocketing insurance rates, elevated shipping costs, take on the risk, right? Especially given the fact that there's no guarantee that they're going to get timely delivery. So according to Bloomberg, dealers are also wary of moving gold overland to other airports. So you might say, well, I could just put it in a truck and send it to Saudi Arabia or Oman, where the airspace is a little more open. But that has its own risks and the complications of moving a high-value cargo across borders. So long story short, we have quite a logistics bottleneck because of the war. So with gold bottled up in the UAE, other markets are reportedly having supply tightness. Makes sense, right? If the gold is stuck in the UAE, that means it's not going somewhere else where it's wanted. One of India's largest gold dealers told Bloomberg, quote, several cargo shipments have been delayed or stranded, leading to short-term tightness in the availability of physical bullion in India. And of course, India ranks as the world's second largest gold market behind only China. Metals-focused analysts say that there is enough inventory in India to satisfy the demand for the time being. Indian dealers imported a large amount of gold in January, so the stocks were already high. And this is typically a period of muted demand in India, kind of in their business cycle there. But a metals analyst focused also told Bloomberg, quote, as of now, there's ample stock. But if this drags on for a few months, then there will be a problem. There are also reports of refiners in other countries struggling to secure doré. According to Bloomberg, India's largest refiner gets about 10% of its doré from Middle Eastern mines. The company's CEO said that supplies have been significantly disrupted, and he told Bloomberg that contracts for new supplies from other regions come with a 60 to 70% increase in logistics costs. So these shipping costs could ultimately find their way kind of into the price of gold. We saw how disruptions in the flow of metal can impact precious metals markets when the tariff worries sent tons of silver from London to New York last spring. You probably remember that. When those tariffs were initially announced, everybody was like, oh, are they going to tariff silver and gold? So we saw this massive move of silver out of London to New York, kind of trying to get ahead of the tariffs. And then when Indian demand for silver peaked in the fall, it set off a significant silver squeeze because there was already a misplacement of metal. And that squeeze is continuing to ripple through the markets to this day. Now, the gold supply isn't nearly as tight as silver. Keep in mind that silver demand has outstripped supply for 5 straight years. So we have a silver market that is in a significant structural deficit. So it's much more sensitive to supply shocks and this misplacement of metal. Nevertheless, even though the gold market is much bigger and it's not as susceptible to these kind of shocks, locking up tons of gold in the Middle East and the squeeze on refining capacity in other areas may well cause shortages in some markets, leading to local price spikes. And the longer the war drags on, the higher the possibility of more serious disruptions. So at best, we probably should expect elevated price volatility as the war lingers on. Meanwhile, your dollar is worth less than it was last year. And that trend is going to continue, war or no war. As a matter of fact, as I mentioned, I have a feeling that the war is going to ultimately increase money printing. It's going to put inflationary pressure into the economy, more inflationary pressure, right? And this is why I have gold and silver, right? To me, it's an inflation hedge. I'm trying to stave off the depreciation of my dollar. I want real money. I want money that holds value. I want my wealth to be preserved. And if you want to do this, you need to consider getting some gold and silver yourself. Call 800-800-1865. Talk to a money metals, precious metals specialist today. Ask them questions. They'll help you figure out how silver and gold can fit into your investment strategy. They can help you figure out which products might be best for you. They can answer all of your questions. These folks are fantastic, but do it today, right? You want to start now. My biggest mistake when it comes to investing and saving for my retirement and preserving my wealth is I started way too late. You don't have to be like me if you're younger, but even if you're older, there's still time to catch up. The day to start is now. So call 800-800-1865, or if you don't want to talk on the phone, go to moneymetals.com. You can chat online with a precious metals specialist, or if you know what you want to, if you just want to buy, you can pick out what you want. You could go get those Krugerrands, and we'll ship them right to you. Or you can store your precious metals in our state-of-the-art bullion depository in beautiful Eagle, Idaho. But now is the time to act because, like I said, your dollar is going to be worth less tomorrow than it is right now. That's almost guaranteed. Don't know what the war is going to do. Don't know what the stock market's going to do, but I do know that the federal government is going to continue to devalue your money, and you want real money. So, with that, that's a wrap for this episode of the Money Metals Midweek Memo. You can get more information about everything that I've talked about on the show today and a lot more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, make sure you sign up and join the other 1 million+ people that are on our email list. Now, of course, you can subscribe to the Midweek Memo podcast on your favorite platform. And when you do, you'll also be able to tune into our Market Wrap podcast that runs every single Friday, where you're going to get a quick overview of the week in precious metals, some commentary, and then conversations between yours truly and interesting people from the world of gold, silver, economics, and investing. So again, thank you so much for listening to the show. I hope you have a fantastic rest of your week, and I'll be back again next Wednesday.